Hi everyone and welcome to Inderes TV. Today we're going to talk about Solwers with Petri Gostowski. Hi.
Hi.
Solwers, what do they do? I mean, they're a group of experts in engineering and planning and stuff, but what do they really do?
Well, first of all, they have companies that are involved in or architecture companies, so it can be designing a hospital or a school that will be constructed. It's engineering, so if we have a new industrial site, they might do some planning for that, and might be some planning for some road repairment works that the public sector does and things like this.
So mostly planning?
Yeah, so they don't have any own construction, no.
Okay, and this is kind of a different, it's a big umbrella with kind of different smaller players under the umbrella.
Yeah, so basically Solwers Group consists of some 30 companies, and all of them are small individuals that are focused on one business area, just what I mentioned, for example.
Yeah, okay, and they have no, this is capital light?
Yeah, basically you don't really need any investments for this. Their cost structure is consisting of salaries of these experts.
Okay, and it's kind of an interesting story here because could you say that they're almost like a serial acquirer?
Basically, the business model is very, very similar to what we usually call serial acquirers. Yes. So
yeah. Basically,
a majority of the cash flows that the businesses generate are invested into new acquisitions.
Okay, and so why? What's the beef here? From an investor's point of view?
Well, obviously, from an investor's point of view, the best thing is that the company is reinvesting the cash flows that the business generate into potentially good investments with high return on capitals. So, whereas another company might pay out dividends and the investor has to carry the reinvestment possibility and then obviously this comes down to how well the company is able to reinvest the capital, and this, if it's a high return on capital, it is usually very good for an investor.
So has it been high return on capital?
It's been, if you look at the past history, the company doesn't have a very long history, but if you look at the past 5 years, it's some 10%, so that's higher than their required rate of return would be. So yes, it's value creative, but it could be also higher.
It could be higher. Okay, and let's talk a bit about the market and the customers. They have in Sweden and Finland are the main markets.
Yeah, it's pretty close to 50-50 the Finland and Sweden division, and then the customers are all the private and the public sector. So if there will be new hospitals or schools somewhere in Finland, it might be a Solwers company that's doing the architectural design or the planning, but then it can also be private investments where they are involved.
So how long are the contracts they have? This is thousands of customers and from different. I think about the revenue stream. So come from.
Yeah, it's a huge group of customers, and average projects are probably like 10,000 euros or something. So it's a big chunk, and they usually don't have a so-called contract base. It's more of a project per project. So depending on the scale of the project, it can take from weeks to a few years.
Mm-hmm. So, but what about the market? I mean, it's a difficult market to have. We all know that. So how do they navigate in this kind of market?
Yeah, it's a tough one now, mostly due to the issues that there's been with the construction, given the higher rates. But the good part is that Solwers is not involved directly in housing construction, where the toughest part is. Obviously, this has spillover effects into the markets they operate in, but all in all, they've done fairly well. So they've been able to organically grow slightly or close to zero, but no decrease in revenues. While they've also continued the inorganic growth. So they've grown past the whole tough market environment. So far so good.
So what about the growth going forward? Are they going to continue growing like with M&As all the time, or?
Yeah, that is very well in line with their strategy. So yes, I would expect that, and I wouldn't be surprised to see some new M&A shortly later this year.
Yeah, coming up as well. So, what about how do you evaluate this kind of entity?
Well, if you look at from a valuation point of view, I think it's interesting to look at the value of the companies that they currently own and what they generate as returns, and then on the other hand, you see the opportunity if they have enough funds to create value with M&A. You can put some value on that, and this is how I like to balance with these kind of companies, and it's rather simple when the business is very simple. It's rather stable. The margins are fairly stable. So I think there's a very clear framework for that.
Okay, so read more in the report. So what about our recommendation at the moment?
We currently have a buy recommendation. So I believe that the stock is rather cheap when you compare it to the current companies and their earnings. And then they have clearly room for improvement on their balance sheet. So by better capital allocation with new M&A, they can create value, and I see that as tempting.
Okay, interesting. Thank you so much for all these answers. Go read more in the report on inderes.se.